All right. Once again, good evening, everyone. I'm honestly very much sorry for all we had to go through today. It was not planned, and I never, intend to have us delayed or waiting. I am once again apologizing for that. So, let's quickly attend to why we're here today, and I want us to have a refresher on what we discussed, yesterday. So, in in hindsight, what we discussed yesterday, of course, this particular session would have more of discussions where you'll be talking and myself, so we can have mutual understanding of what is being said. Just a quick recap of what we discussed yesterday. So we introduced us to the foundations of trading and financial markets. That was yesterday. Just a bit of talk around um, the the evolution of money, understanding that and the markets, so we can see how money came by from the barter system, gold, fiat, the digital era we are currently in, and cryptocurrencies that are currently shaping the face of finance, as it were, in the digital world. And we also looked at the role of financial markets, how the financial markets stands or exists to connect buyers and sellers, how it opens room for investments, giving everyone a fair access or fair opportunity to grow wealth based on the amount of information at their disposal. We saw how the financial market is very critical to the providing of liquidity both for individuals and businesses now. That also is an avenue for those who have some technical understanding of the market to speculate on different financial assets to make profits, right? We also gave us an overview of how the traditional financial market differs from the crypto market, while we spent a bit more time understanding the core principle of supply and demand, how that demand or the demand zones are responsible, looking at it from a chart perspective, for the bullish market or a market going upsides, and the supply zone or the selling point of a market from the chart perspective also is respond for the market going downwards. We looked at both of these critical factors when as it applies to the financial market, so we can have a critical bedrock for understanding that everything about trading and knowing what and how to trade rises and falls on our understanding of supply and demand, and how we need to, beyond the surface we had scratched, take our time to learn more from a technical perspective of understanding how to analyze the market, to reading up on these varieties of subjects within the confines of supply and demand, while also deliberately taking a view, journals, news outlets, and articles, and drawing inferences as to how this could um, be a supply um, indicator or a demand indicator that tells us that this particular asset, investors are about to go sell them off or they're about to go buy into them, right? So, and I think to that particular section, I would like to add this important note that as an investor, you must learn to buy the fear and sell the greed. Take note of this word I've used. I might not have mentioned that yesterday, but now I'm saying this right here, that you learn to buy the fear. How do you know when a particular asset's at a demand spot? It is at a demand spot where when the sentiment of the economy or the sentiment of investments that you are feeling or sensing or could read is ticking fear. Everyone is afraid of getting in because it has sold terribly. That is a demand spot. But when you see people beginning to talk so much about it, that is a greedy level, and that is a level to sell. That is a supply level. So it's again me saying you should learn to buy the fear and sell the greed, and that is a very critical indicator to let everyone who are analysts or investors know, be it stock investing or crypto investing, that if you want to learn to be ahead of everyone in the trading curve or investment curve, you must always learn to buy the fear and sell the greed. All right, now we ended off ended up the whole discourse by saying we should go download trading view, look up to chart. I think we mentioned was it BNB and LTC? I can't remember which chart I made a reference to, but I think BNB was part of the chart we were asked to look at, and then that was how we wrapped everything up. I hope we all are together. I mean, are we on the same page? Do we understand what I've just said? Can we hear me, please? Okay, great. So, just to ask, how many of us were we, Miss Mary, Mr. Lawley, were you both able to check those charts and download those applications? I think we asked to download TradingView and CoinGecko, yes. So, did we download both and have we signed up? Have we taken a look at the charts? Just, unmute your mics and respond. Yeah. Hey, okay. Yeah, I understand that. Was that the same thing for you too, Mary? Hello, can you hear us, Mary? Hello? So what I want to do right now is, as we are starting, I want to use a phone. Um, I want to use a phone and an application that I don't know if Mary is hearing us or she's still with us. Um, I want to use a phone and an application, and a system that I don't have trading view logged in, so that we can both do it together. So we can look at the what's it called? We can look at trading view together from a mobile perspective. So we're going to be doing the practical on trading view right away. Are we ready? I want to be so sure we all are ready so that I can use this phone to log in and are we all ready, please? Please, can we hear me? So, yeah, I'm going to. I'm going to share my screen on this one. So sorry for ongoing. Um, so I want you guys to follow as I'll be. Oh my God. Okay, so I'll be trying to log in to trading view with an email that that I've never used on trading view. So we can set it up together. Are you ready, please? Are we all here? Ah, okay, okay, I think this is better. Let me see how I can share my screen. Hmm. If you're on YouTube watching this, you might not know what we're doing because I'm not sharing the Google Meet call. I believe we can see the screen. Okay, so yeah, let's try to log in. So I'm signing in with Google. This particular email, I don't think I have it on TradingView. And I've not logged in on TradingView on this phone. So I'm just going to sign up right away so we can see that. So as I'm signing up, we all can see. Please just bear with the echo. I'm so sorry. I don't even know what I can do about that now. Okay. So yeah, it's not that okay. It's not visible. You're not seeing the screen I'm sharing. Okay. Or I don't even know what to do right now. I don't even know. Okay, let's just try and finish up. Okay, okay. All right. Thank you very much. So as we all can see on the screen, there are different financial assets here. Of course, TradingView is doing their flash sale for people to get certain features, right? I'm using the figures away because that's not why we're here. But all you are seeing right here are different financial assets. There's S&P 500 index. Those are indices. US 100 is an indices also. The same goes for VIX, right? Then you have stocks. These are not all of them. Then you're having some futures, US oil, gold, silver, yeah, CFDs. They're called commodity future derivatives. So we're having forex, we're having some crypto. So, anyways, what really matters is the home page, as you're seeing, when we're having watch list. The lower bar, you have watch list as the first tab, then you're having charts, right? This is where you get to see different candlesticks. Sorry, my network. Okay, let me use this again. I think that was better. Probably faster. Now, before I just jump into stuff, now we're on chat. What you are seeing as the pen icon here, right? If you're looking at your phone, once you click on it, it will bring you to a whole lot of tools. You have a trend line, ray, extended line. All of these have their meanings, but the most important ones here are trend lines, horizontal ray, vertical line, and maybe parallel channel. Now I'll come back to all of this, but then if you swap or swipe your phone like that, you'll be able to move into different other icons of great use that are also tools, right? Right. If you come over to patterns, you see different patterns. All of these are used for analyzing the market. So you're having head and shoulder pattern, ABCD pattern, Elliott impulse wave pattern, different patterns there. We can't go about explain all of this in this crash course. I really wish I could, but trust me, this will take a lot of hours. Now, you can always play around with them. There's the tools section where you have the ruler. We call it ruler, but here it's written as measure. Is to measure the percentage of movement upwards or downwards that a particular financial asset moves. Let's take, for instance, let's open, sorry, let me open the same gold. So when you are saying 5M, it's the time, 5 minutes. I tap on that to change it to 4 hours so that I can have, something like that, a more closer chart. I don't know, this color seems to be different from what I was expecting. I was expecting a red and green color. When you open yours, Olawale, was it red and green also, or black and white as you're seeing on the screen? So I don't know why this is like this, but either ways, either yours was red and green or um, black and white. Maybe this is an account I had before. I can't tell. But I was expecting red and green because that's the first candle color you should see. If you want to change that, where you do this is this three dotted icon. I think this a minute please. Is it? Let's see. I think it's this pen. No, let me flip this over to landscape mode so that I can. Okay. So all I'm just trying to do is show you guys how you can change your color font if you want to do that. Background, where's that? You know what? I can't find this on the mobile right now. I don't know. But I just wanted to show you that you can change this. Okay, I just found it. So you long press the Canva, the tracing Canva. I just did this. This is a sidebar. You having the numbers 4,500, 4,300, 4,500. That side, I long pressed it and I brought out this place where I saw more settings. So by clicking on more settings, it will bring you to this exact interface. This is what I was looking for. So you can come to symbols, and then you can always change the body of the candle. I think what we have naturally should be green for the body and probably dark green for the borders, and then green for the candle wick. This is for the buy. The candle is going up, and then this should be for the sell. Can just use red all along, something like that. So yeah, so let's just permit me to use this color, right? And if you feel you want to change some things there, you can always click again, get over to more settings, and come to symbol, and yeah, you can always tweak it the way you want. Um, and it will just always suit your convenience, right? When you feel you're okay, then you're good. Uh, all of these are all, for me, they're just aesthetics and not the real thing when it comes to analyzing the market and trading. So, and you can always do your canvas not to have grid, because as you can see on the interface, it's all broken into rectangles, like we're having grid boxes. I can always take that away if I want, by coming to the canvas, and I will take away, the grid line. No, the grid lines was, um, verticals and horizontals were marked. So some people want theirs to have verticals only. If you check, verticals are the only grid lines, right? But then if you don't want any, you put none. Just leave it that way. So, anyways, this is how a typical chart looks like, and that's where I'm driving at. But then for you to do your analysis and to map out demand and supply, don't forget this particular chart is gold, right? You must always make do with the icons. So bringing it in landscape mode, if you're using a mobile phone, makes you to click on the pen and use more the icons, because TradingView is very robust, um, an interface. It's like an immersive environment, just like how developers or programmers have several IDEs for implementing their codes or virtual environment for test running their codes. TradingView is a place for traders to test run their analysis and their models and forecasts on an asset. So if you click the pen, you have so much you can pick. So let's begin with the trend line. So what is the importance of the trend line? The trend line is a line drawn to identify the trend. So there are three major trends in the market. So I'm just going to draw this like that. I just pick the trend line, and I just let me do that again. So I picked it and I moved this cursor from a point to connect to another point, and I'm drawing like that to connect with more points, and I'm keeping it, sustaining it that way. When I'm done, I tap again, and I'm off the tool. I can always change this from a dashed line. As you can see the options, I tapped on that dashed line option, and then you're seeing line, dashed line, dotted line. I can change it to a line. So what have I drawn? I've drawn an uptrend or a trend line that points upwards. What this is telling me is at every move of this particular asset from this particular point, right, to this point, it seems to be respecting this trend line. It comes back here, move upwards, come back there, and like that, move upward, come back here, and whatever makes it to break out of this trend line tells me it has changed the trend. And so this is a simple way some persons do the analysis. They analyze the market using trend lines. So as they've drawn it, and once the trend line gets violated, just like it was in this case, because the expectation is when it gets here, it should buy, but then it broke it. And for you to know it indeed respected the trend line, when it breaks the trend line, it will come back to beat the trend line goodbye. That's what they call a retest. It breaks, retests, and continues a new trend. At least that's what the basic level of trading is all about. Please, I don't know if you get that. Okay, I think I'm getting a chat. Free group calls have a limit of 1 hour. Okay, I think we need to move on to another. Yeah, am I right? CM, are we moving from this call to another? Okay, okay, so I'll be there. Okay, so, all right. I think we're back. Thanks again, everyone. So, I don't know, I believe you can see the screen again. So, um, that's the basics of what trendline is all about. Let me, in fact, teach us something right here quickly. When it comes to analyzing the market, before we get into practicals on how to buy and sell on sports and how to trade futures, it's important for you to know that, like we explained yesterday, trading is, okay, let me use this, is to be pictured as a tug of war between the buyers and the sellers. And when there seems to be a lead in one of these categories, the market goes that direction. So if the buyers are the ones having the lead, I'm looking for an icon, so you can always search an icon you need. I'm looking for path. There's a tool called path. So yeah, there you go. Now, whenever a particular category takes a lead, right, the market goes their direction. So I'm just trying to draw something. Just follow me. So what you're seeing right here is a typical uptrend or an example of an uptrend. Let me bring this up a little bit. Just follow me. I would also pick the pen icon and search for text. You can also be doing this as we're doing it. There's anchor text and there is text. The anchor text is fixed on the canvas, immobile most of the times, and then there is a text which you just use to make some scriptings when you are drawing your analysis. So literally you can write or pen all of your assumptions and inferences on your Canva and it's a saved there, right? Because that's where you do your analysis. So I'm going to write on top here, sorry, I'm writing uptrend. I believe we're seeing that. To say that this particular thing you're seeing, it's a picture of an uptrend. And the more you use some tools, it finds its way to the favorites. So let me come back and pick path again. So just to make the uptrend a bit longer. Now it's important for you to understand that why I have the uptrend drawn this way is because the market never goes either upwards or downwards. It does not go upward or downward in a straight line. So I want to pick arrow, which is another important tool to show the direction. So this is it. That's an uptrend. I'm reducing the pixel. You can always tap on that and then reduce the pixel. The pixel is the size of the wave. You can always change the color, right? To whatever it is you prefer. I don't know if we are getting all of those, right? So, so that's an uptrend. Now, where do you get to see something like this? Come to the market. This is it. This is an uptrend. It goes up and comes down, goes up and you might not be able to find that um how do I say this? You might not be able to connect that easily or link that up in your mind, but just look at that. Or in fact, let me even change the chart from candle to line. Now I don't know if you're seeing this candle. How do I move this? Okay, yes. Just look right under where you have this cursor. The icon at the lower bar right there, where there are two stops blended together. That's the candle. So as I tap on that, I can change it to line graph, and then this is a line graph. Now the line graph is literally a bit similar to what we drew the other time. I mean the uptrend. You can see the movement from here to there to down, I mean upward, and like that it continues. I will change that back to a candlestick. Now that's just to let you know that an uptrend or a market that is in an uptrend does not get to the peak of its trend by just moving in a straight line, which is like what you have here. It moves upwards and downwards, and over a period of time, it fulfills the condition or it fulfills the condition of an uptrend. And the same thing goes for a downtrend. So, what are the major market cycles? So, the major market cycles are an uptrend and a downtrend and a consolidation market. So, I'm picking I mean, path again. So, trust me, this might look or sound so bizarre to you because it might be your first time, but when you give yourself to learning and you keep taking more and more and more insight, you would get familiar with all of this. Okay. So just like you have an uptrend, I just tapped on the text too because I want to duplicate. I'm using the option icon. You're seeing the three dotted icon right here. This, right, this three dotted icon. I tapped on it and I'm going to click clone. Why did I clone? So I can easily move the text from the place it was to this point after duplicating it, so I don't need to search for text again. So I'm going to write down trend, and don't forget you can always change the color. It's on you. So I'm just going to duplicate this also, same way, clone it, and bringing this down. So what you've seen also now is a picture of a downtrend. Now, I think it's not difficult for anybody to understand what all this is all about. Hmm? I would make us see some details in these trends just in a moment. We would have to do a bit of introduction to analyzing the market, some basic details, but we're not going anywhere further. That would really take so much of our time. And that's not the scope of this discussion. But I'll just highlight some important things for us to know, right? Um, Just as we have an uptrend clearly in the market charts, you would also see downtrend in a market chart. Now, there are important things I would love to mention, and please, if you have questions, don't wait till the end of the class. I might not be able to connect where and how or what point you're asking your question from. Unmute your mic and make me visit that again, please. Okay. So there are terms such as HTF, and this stands for higher time frame. There are terms such as LTF, which stands for lower time frame. What does this mean? Now, I showed you something at that time. Beside the financial asset, where you're seeing gold, you would see 4H. That stands for 4 hours. What does that mean? It means one candlestick that you're seeing, just one, right, represents 1 hour. It represents the entire transactions of buys and sells in 1 hour. And the print of each candle tells you which side of the war won, right? Which side took the lead, right? The sellers are the ones in control here, right? For the whole 4 hours here. Now, when I tap on this and I move it to 1H, that implies that the candles will be same will be 1 hour per candle. I can always bring that to 1D, which is 1 day, and 1 day would mean one candle. The same thing goes for 1W, 1M. You already know what that means. One candle will be equal to 1 week, 1 month, and of course 3 months consecutively. Now, I want to show you something. The implication of what HTF stands for is higher time frame. Higher time frames actually it depends on whether it is that is teaching you and how you view higher time frames. Higher time frames begin from 4 hours up to 1 day, 1 week, 1 month. All right. Now, it's important to also state that within 1 hour or 4 hours, just like this candle, I'm zooming out. You see this candle? I would take my horizontal ray. I'm picking my pen. I'm searching for horizontal ray. Okay. So I'm picking this. I want to mark this candle. I marked it there. I'm reducing the pixels so it can look better. I'll talk a little bit about candlestick in this discourse. Now, we haven't addressed the slide, but I'm telling you this is important. So I'm duplicating that, I'm cloning it, so I can place careful marks on that candle. Now, I believe we all are seeing this candle. It's looking big enough, right? This one, just this one. I, I want you to pay attention to it. The wicks on both sides. I'm going to change this to 1 hour candle so that you'd see the whole transaction that went down within that 4 hour candle. Before I do that, let me quickly put my vertical ray also so you can keep your eyes within a mark range. So, yes, I'm going to mark this point and it will also be 1 pixel, but this time around I'll change the color to blue, something like that. So you will go beyond this candle and this point in your view. Changing it to 1 hour right away. Alright. So you know that between this point and this point, just before this particular candle, it was the sellers that had the momentum. Are you seeing that? So it was 4 hour candle, right? That means when you count one, two, three, four. These are the four candles that make up the 4 hour candle, the 4 1 hour candles that make up the 1 4 hour candle. Interesting, right? Yes. And of course, when you keep closer mark or closer look on all of those candles, you'll see how those translate into 30 minutes. But then you can literally see that there were cells, 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 and a little bit of buy before the final sell. But this is for you to see, interestingly, how the markets interconnect, right? Now, let me quickly talk a bit about candlesticks. So, I'm saying this to say there's a difference between higher time frame and lower time frame. So, some who knows what higher time frames are about, like they have seen from a daily perspective, the gold, which is financial assets, overall, by what they've seen, the saw that gold has been buying from 2022, right here. And if you remember what we talked about demand and supply zone yesterday, I'm going to search for a rectangle here, right? You would realize that this was a supply zone. I'll just mark that point out. I don't know if you see that. Market got there and it's been selling. It's been selling, of course. And then just carefully follow what I'm doing. I'm also going to pick another rectangle. Okay, this also is another is a demand zone. I don't know, just look at it as I'm drawing it. I know you might not understand what makes me to pick this point, but trust me, you will understand. Um, this was the point the market broke above, and then it respected the point and it began to buy. It got back there, it bought. It got close, it bought. So because of what happened here, that this was meant to be a supply where the market sold, but this time around it broke above it, and then it came back there, and we've seen multiple touches that makes this point a solid point. All right. Now, that said, I want you to note that even though we're having a supply zone above, which is a zone where the market gets to and it sells from, proving that point to be a solid point of resistance after multiple touches, right? Which also explains the demand zone, right? Even though we have the supply zone up there and then the demand zone down in between, yes, we're still having a downtrend, isn't it? I'm coming let us come on. The what I'm saying? We have a downtrend. So I don't know if you can see this. Let me pick the arrow. So I know that will bring the picture to mind right now. So you see that? That's the downtrend, right? What makes it downtrend? It is when the market keeps printing lower lows. Now, this is a low. This was an okay. This is an high point. This is a low. This particular one. This is another high point. This is another low. Another high point. Another low. Of course, if you look at this from its line counterpart, it becomes clear that just as we drew the path or the pathway for a downtrend, which simply is something like this, you can literally see how that is a downtrend. A downtrend keeps forming new lows for every successive high. So this is it. Look at it. When it comes from a peak like this and drops down, it retraces to form a high that is not as high as the previous high. And this particular high will be responsible for forming a low that will be lower than the previous low. And this particular new low, lower than the previous low, will form another high that is not as high as the previous high. So this is a high point, but this is a low point. And then the more successive formations of lower highs and lower lows explains a downtrend. Now, I might just take that again, but let me just quickly make some annotations. So what you have there, I can double tap the trend line so I can type on it. I'm going to write low, high. Oh my God. Okay, low, high. Why is that? Let me turn this over so I can type there. Low, high. I think that's it. And I can always move the text to the middle of the line, right? And then that's clear. So you see that I can always duplicate this, clone, and I bring it here. So this explains a downtrend, right? And for its low counterpart, I would have a low that will always be lower than the previous low. That is a downtrend. So I'm double tapping that. So I'm going to write low, lower low. Okay. I'm going to duplicate that also and bring this down. Please, do we understand a downtrend? From this explanation, do we? Can we just respond, please? Now, look at it from this chart. I know this is a line graph. Don't forget the line graph. I changed it from this point. This point. I can always return it back to a candle, right? But then, for the sake of ease, always try to look at it from a line graph. It sort of takes out the noise. So you're having this high that actually brought this low. And it should be called a low once it will form for us another high. This is a low point, but really, um, well, yes, it is responsible for this particular high. So yeah, this is still good high. And then it was this high that led to this low, and this low led to this particular high, because this one was higher than all this, and then this particular high led to this low, and this high, I mean this low rather, led to this high, and then like that, like that. So you would always be seeing the high forming the low forming the high forming the low, but then the low must be lower than the previous low. But then when you suddenly realize that the market is no longer forming lows, then you can be so sure that it has shifted from a downtrend, as you can see in this case, because the expectation from here is that from this lower high, right, it should form a lower low, but it didn't, because apparently this is now a demand zone based on what we explained here, right? And then the market, since it refused to go lower, entered what is called a range. That's a ranging market. It's neither going upwards or going downwards. It's just at best going sideways. Now, this is it. You literally have to look at it that way. So, it's not difficult. I want to look at it for what the market is saying it is doing, because the market only has two directions and one break time. The directions are upwards and downwards, and the break times are consolidations or ranging. It does not know where it is going, it's just waiting. It's not of those moments the market seems too boring. No one wants to trade it, and I encourage you not to, because you might almost not know where to catch it. It's like devil beans, or what they call velvet beans. If you hold it anywhere, it can make the person go insane. So I'm saying this to say for every trader, it's a common rhetoric that you should trade the trend because the trend is your friend. Now, because when you have clear understanding of the head or the eye, and then it forms the low, there's a particular tool called Fibonacci tool that we can use to measure where the likely eye is going to be. And so, by that tool, since we've established the fact that now it's a downtrend, it becomes easy for us to wait for the next retracement once this low was formed. We measure from this high to this low, we expect the retracement, and then we take the short, and then we profit. And so we keep doing like that, making more profit as it goes down if it were a downtrend, or making more profit as it goes up if it were an uptrend, because we're trading the trend. And we can always estimate and expect a retracement for a continuation. That's why we trade the trend. But for a ranging market, there's nowhere you have an estimate of where it wants to go. So it's best that every trader avoid ranging market. Once it breaks out of the range, then we say, okay, we're resuming where it is breaking out to. If it breaks out above, that tells you it's an upward trend, it's resuming, and then you begin to draw out the higher highs. Now, I want you to look at this as the opposite of the downtrend. The downtrend forms lower highs and lower lows. The uptrend forms, can we see any? The uptrend forms higher highs and higher lows. Great. So it's easier than ever. So just call this point the starting low. So let me just call it low, right? So I'm going to duplicate that. Then this one will be called the higher low because I mean it's clear it is a low that is higher than the previous low, right? It's an higher low. And then the same thing, sorry, the same thing goes for the eye. It is a eye. This is the starting point, right? So it's this one, this point is just called an eye. But then the next one is called an higher eye because it is an eye that is higher than the previous eye. So because of this singular nomenclature or meaning, it becomes easier for us to identify what trend is in trend. Yeah, something like that. So you can see that this eye is higher than this eye, and the same thing goes for the next. Yeah, this is a trend that is in trend. Yeah. So and then the next. So now you will be asking, how come I know where exactly this market gets to, and then it continues upward, or sorry, where it gets to once it makes this low, where it gets to, and it continues downward. Well, how I know that is because intuitively I've been used to the icon called the Fibonacci tool. Now, the Fibonacci tool is just that good body of yours that helps you. I mean, Fibonacci, I think it's double B. Wait, yeah, there's it, Fib. I'm picking it. Is that the body of yours that helps you to measure how well the market will retrace, either in an upward trend or in a downward trend? I'll give you my cheat code. If you're using Fibonacci retracement, if it was a downtrend, you will take it, you move your cursor to the relative high that you want to measure to its relative low, you draw it downwards. And the perfect entry I use is 61.8. Now, I don't know if you see this. You'll see several markings. See 0.23, 0.38, 0.5, 0.618, 0.78. Where do you enter? How do you know the exact price to enter? This is it. 0.618 is called the on time entry. It is a sniper entry. It's an entry where when you measure it on a particular asset, once it gets there in a downtrend, the market must fall from that point. And where do you want to put your stop loss? There's something called stop loss. It's a measure to mitigate your risk. It is the place you put price to protect your trade should in case the market goes south, right? Because there are such moments where volatility is moments in the market where there are irregular price actions, perhaps due to news or some other external factors that moves the candlestick faster and way higher than normal. Yes, Lawali, you're asking a question. Go ahead. Okay. So no, it's okay. That's very fine. Thank you very much for bringing us on that again. So the Fibonacci tool is just your body for making exact estimates and probabilistic points where the market will retrace to before continuing. You can always draw it downwards. And so I picked the tool. Again, I'm going to do that. I head over right here and I search for fib. You'll see that you pick it. If it were a downtrend, you'll be mirroring from up to down, right? Because that's where you are going to. You mirror the direction you are going, up to down. And then you pick your entry. It should be 61.8. That is the exact point. The stop loss, honestly, according to the rule, the stop loss should be right here. The I, that exact point you have picked to mirror down, that's where you put your stop loss. That point, the market should never reach there, right? But the 61.8 is a very precise and quick entry. So the market might come to the zero point 0.5 zone. It's called the golden pocket. Golden pocket because sometimes the market gets here and just drops down. And it won't get here at all. But whatever makes the market comes here, it does not wait. So there are times the market will come here and it's be acting as though it's already going down, but it won't go down. It suddenly comes back up to this 61.8 and then drops down quickly. I'll show you an example. But then this is how you pick or draw your Fibonacci, retracement. The same way we applied it for the downward movement is the same way you would apply it for the upward movement. You only pick your Fibonacci tool, right? Once you pick that tool, because you know where you're going upwards, so you draw from the bottom upwards, like that. And so, if you check again, the point of entry is where 61.8, exactly there. Can you see that? Now, if I draw it over and over again, this is just on the schematic diagram we have here, or the schematic chart. It's very interesting when you go practice this, right? You draw it up like that, see it falls, 61.8, right? And like that for the schematic diagram. Now let's come to chart. Let me take this off. But that's what Fibonacci is all about. It really helps you to know where is your precise entry once you are trading the market trend. Fibonacci retracement. No one is really going to outgrow that. We just might find different tools to replace it. Okay. All right. Now let's look at it this way. This is a daily chart. That's gonna mean one candle will take one full day to happen, and that means if you're really trading this downtrend on gold, you wait a lot of days for you to catch this particular sell. All right. So let me look for a Perfect. Okay, maybe we should just in fact use this one. So, for example, if you draw the Fibonacci, this point to this point has not yet established that we're on a downtrend. But when there is a successive lower low in continuation, right, just like we had from this top down, it got here and then it got low. Once this happened, I got a guarantee, an assurance that it's likely we are going bearish because it has happened like two times. There is a low here, should have continued upward because we've been upward all along, but then all of a sudden, these that should have taken us upward failed to do, and then it stalled for a moment, it dropped, telling me that we're likely bearish. This is just a simple way of making you see into my thought flow. And then you feel none of this has happened. This was the low, this was the high, this one that led to this low. I'm going to measure it. You pick your two, let's pick Fibonacci. So you from that point, you don't need to you just have to check it like that, and you draw to this particular low. The low, the exact low. This was the low, and that was the high that we measured. So where is 61.8? This is it. Don't forget this whole move, I mean, from here has happened all the way down. So you were measuring it when the price was somewhere around here. All this hasn't happened. So when this happened, you measure, and then you're like, I'm gonna set my entry 61.8 here, 1953.283. Are you saying that in the right bar? Are we saying that? Okay. So I would pick my horizontal ray to mark that price. So because that's where my 61.8 is. Now I would come and move. Do you see what the market did? Aha, exactly. So if I was going to take this trade, I'll pick my short position. That's what it's called, short position icon. I would put it right here. Right, my stop loss will be right 78.6. That's where I mostly put it. But the rule says where you measure is where you put stop loss, which is right there. And I put my take profits immediately below the market must take. Don't forget, if you come right back, you would remember for a downtrend, let me take all this off, right? Once it moves from a lower high to a lower low, if it is still going downwards, it should retrace to a lower high, a new lower high, to continue a lower low. So if you've got your entry here, you want to leave around here, right? Same thing. So your entry is right there. Your take profit to be right at this immediate low. And so this is it. It's as simple as that, right? And then the next thing we'll do, draw this again from this one. I mean the Fibonacci. That's one thing. And just using Fibonacci purely. Don't forget there are many other refinement tools we use to attain perfection and mastery. But then using Fibonacci, you draw again. Your entry will be likely where? Here, 61.8. Right? It got all the way to that point, but it didn't go above that point. I don't know if you see that. But then it still dropped all the way downward. So this is just to let us see how analysis goes, the uptrend, and of course, just as we measure for the uptrend, I mean the downtrend, you can measure for the uptrend. That's the way. So I believe we've left one thing or the other about Fibonacci, uptrend, downtrend. But then let me just say one few things about candlestick full grain of particles, because time is not on our hand. All right. There are different types of candles. You need to check that. I would send PDF across to us. Um, Candles have their meaning. There are engulfing candles. This kind of candles you're seeing here is engulfing candle, where the red candle is engulfing the buy candle. It's telling you that the printing of this candle tells that the sellers or the bears are in more control of the market. This is called a bearish engulfing candle. Those are engulfing candles. There are also other kind of candles called pin bars or dojis. These types of candles, their candles are signaling decisions in the market, right? So candles have their meaning, and every candle has a way it opens. Every candle opens, right? Um, so there is the body of the candle. There are the candle wicks. Now look at this very well. So there is a candle wick. There is the body of the candle, right? And those are important part of the candle. So a bearish candle opens from the top and closes below. A bullish candle opens from the bottom and closes above. So where this one opens was where this one closed, the bullish candle. It opened like that. The volatility made it to get to that top. That's where the candle wick is. The little jode where it bonds to like a candle. The wick left that wick there and then it opens its body down. The volatility brought it down here, but it closed here. The next candle opens from the exact point this one closes. Volatility took it up, then the body formed downward, it closed here. Then the next one like that. And that's how candles are. Understanding this will let you most likely know how you can play with time and precision of entry. Okay, so well, those are going to be of great importance if you want to learn, market liquidity and ICT market trading. But I'm just saying candlesticks, trend lines, support and resistance, Fibonacci, all of these alongside with time can make anybody a better trader. So I think you have had a bit of understanding of how to go about trading views, setup, and how to use right now, I believe. So I would love to leave this call from this video. Okay, now, can we see Ellen? Can we see Ellen, please? Okay, great. So since we've done a great justice to that, I think let me just run down on the slide. We've done so much more in the slides than we can. I'll quickly also probably need to join with another so that I can show us how we can buy and buy assets um, on BitGet. Well, I would love to also say something quickly. Maybe I should also quickly join the call again. Okay. Let me join the call. Okay. Sorry. Let me join the call again. Okay. I'm joining the call so that I can show us how you can move from asset to asset on TradingView. So, no, not this. Okay. Okay. Just right as you're saying, you can tap on gold and search for anything, any stock in China, in Nigeria, any asset, any crypto. Take for instance, I'm going to be searching for VET USDT, VET USDT. You would see, sorry, all those assets right there named VET. You see that? So you can always search by tapping on the asset on the pair. Oh, I don't know if you're seeing this. So once you let me turn it over. Once you tap on the VET USDT, once you tap like that, you'll be able to search for anything and then put their names, you'll be able to find them. Be it Tesla, including Okomupam, right? For Nigeria Stock Exchange, you can find anything. It's as important as that. If you want to look at the chart and have a glimpse of what is going to happen. Sorry, Okomu. So something like that. I don't know if we have really good charts in Nigeria. Our charts are very terrible, actually. I know. So you see that, but then you can see actually have the line graph at least. Those are things that can actually help you to have a understanding of what the market is all about. So you understand what I'm saying? So I'm saying I just have to bring us here to let us know how we can move from peer to peer to asset. And again, finally, you can always watch lists. When you click on watch list, you can take away the ones you don't need. Like you see, I'm doing that. You delete the ones you don't need, delete like that, delete, and you can always add with the plus icon, right? Because you're gonna add DYDX, which is an asset, crypto asset. You can just click add like that. It's added to your watch list. You've seen that. So that's it. So I believe the more we make the most of using this software, TradingView, the more we see how very resourceful it is. Okay, so let's quickly run down the course. All right, so I think I've already given us, I've done the recap. Yes, let me just do risk management because we've done trading, we've done analysis already, right? I've done analysis. I've shown us what it is to analyze the market from trading this perspective. I'll just show us what it is with risk. Now, this is a real part of trading. The real aspect of trading that really matters is not I can make this amount of money. It's about how much I'm willing to risk and how much I can be very disciplined. And I'm telling you, this is a very important part of trading. How you can be very disciplined because the thing is with the possibility to make so much in the market comes the tendency to accommodate greed. And if you don't have the trading discipline of okay, I have $100, I'm only going to take 4 or 3 trades per week. I'm only going to have this amount of percentage of loss. I can't afford to lose more than $5 per trade, which means if I'm taking 4 trades in the whole of the week, I only have 4 days. I only have $20 to risk in the whole of the week, and I'd better be careful to just take 1 trade per day. So all of these kind of disciplinary measures are very important because the rule of successful traders is you protect your capital to trade another day. There are times when you have profit, there are times when you have losses in the market. But when you are, let's do a simple mathematics. Let's say you are having a $1,000 account. So you have $1,000 account and you have a rule that you can't afford to lose more than 2% of your trading capital per trade. So you're having $1,000. Let's do the mathematics. I'm going to calculator right away. You're having a calculator. Um, okay, yes. And you're having $1,000. So 2% of your 2% would mean 0.02 times 1,000. That means you can't afford to lose more than $20 per trade. And you've told yourself you're only having 4 trades to take per week, right? And that implies that you can only risk $80 per week. So let's say you're having are we listening? So you're having just $20 to lose per trade. You can only have $80 per week. Your losses for the whole week is already known. That literally means you've soaked that in and you are aware that this is the amount you can only afford to risk for the whole of the week. But then you have a good 50% winning rate, which means when you take 4 trades, you have a very high tendency to win 2. And for your winning trade, your reward to risk ratio is just 2:1, meaning that while you're willing to risk $20 per trade, you are wanting to get a profit of $40. So imagine you add 2 winning trades, right? Which is 40 times 2, isn't it? Exactly. You have 2 winning trades, 40, that's $80. And then you have 2 losing trades in the course of the week, which is 20 times 2, right? And if you subtract your loss from your profit, 80 from 40, you still profited 40, isn't it? Yes, you did. And that implies that even though you had 2 losses in the middle of the week, losing $20, but with a very minimum, and that is something anybody can actually do, 50% winning rate, that implies that you are having a $40 profit on your $1,000 capital in the course of the week. And that literally is 40 divided by, let's do the math. Okay, 40 divided by 1,000. All right. Um, that means you have 4% return on a week. 4% return on a week. If you do that for four more times, that means you're having 60% return in a month. No bank gives 16% in a year. So you having 16% means you're having $160 on your $1,000 capital. Compound that, brother, by 10 times in a year. You're having 1,600 without stealing or robbing the bank. Now that might look small to some places, but I'm telling you, trust me, that's something huge. I'm not joking. I'm not joking. So I'm saying this to say that risk management is very essential for anyone who wants to play the game of trading for the long term. And it's a very important skill that can always improve and help your capital base. That's the truth. Yes, I personally traded an account from $15 to above 1,300. 15, 15. And this is years ago, right? I'm saying this to let us know very importantly that anything can happen, just to let us see how very wild trading can be. It's very, and that's literally saying, and this happened in less than 2 months. So just imagine that 15 turning, what would be the mathematical metric of that? A thousand, I mean, 1,350, 1,400 divided by 15, right? 1,400 divided by 15 explains the amount of percentage that is in right? That's about almost 10,000%, 9,300% in about 2 months, right? But if risk management was applied to this, it could also be great. But that this was years ago. I also lost some of the money. I withdrew some. I'm saying this to say that risk management gives room for you to continue trading for a longer time. And some of us are here because we actually have risk management as a lesson we got to learn sometimes in a very hard way. So the biggest beginner mistake is no risk management. Let me just get inside. I'm not going to use stop losses. Those are very, very unreasonable way, and I'm very, very honest. I'm not trying to be abusive. A reasonable way to go about trading, or jumping out after a bit of trading and saying, "Well, we'll collect people capital to trade." No, that's not the way to go about it. So before you hit the buy button or the sell button on a particular trade, you must have clearly defined your amount of risk per trade. Your stop losses must be also set, and your place of taking profit, where you're going to leave the market. We literally saw that from the chart we're discussing about the other time, where you likely want to take a profit. You would set that, or you get those figures from trading view. So your stop loss, where you want to say, hey, if the market is going south, take me out here, or where you want to say take profit, where when the market gets to this point, let me be out, irrespective of how well it goes. Even if it goes up all the way and you just left midway, that does not matter. Yours is that you've taken the portion that you have predefined. Okay, now let's quickly run down on the next. So stop losses, take profits, all of those are important ways to manage your risk. I'm going to show us how this works, both on spot and futures. And I think this other thing I would love to discuss is how you can do market analysis or basic market analysis fundamentally. I've done market analysis on the chart for us. Um, for you to do basic analysis, you need to come to a platform like CoinGecko, right? If you have CoinGecko, I would implore you to open it, okay? And okay, you know what? Let's do it this way. Let me open CoinGecko on my PC so that we can both share together on that. Okay. So okay, why do we need to come to CoinGecko when it comes to doing research on coins? Because you want to find, if you want to find a gem, when I'm saying a gem, um, Warren Buffett calls them penny stocks when it comes to stocks that are not big, that are very much cheap, stocks that are not as expensive as Tesla, like not as expensive as Microsoft, stocks that are not yet in the global phase. These are the stocks that really make people to have money. Warren Buffett bought thousands, if not I think millions of Coca-Cola shares when they were not known, right? And that's how to go about making money from investing. You must learn to do research on platforms like CoinMarketCap or CoinGecko. I will be showing us that just right away. This coming over to CoinMarketCap, right? You can, easily just look up for um, assets or coins in their categories. Clicking on categories, as I'm just doing, you will see different categorizations of coin. Look at this now. For the past 7 days, coins that are under the category of smart contract platform, they've been down 7.6%. Several categories like that. Stable coins made in US cryptocurrency coins have been sold down. I mean, you could always read the chart like that, like that, like that. And this is just a little bit. But privacy coins seem to be up 7 days. You begin to take your note. Why are these ones up almost 20% in 7 days when every other coin seems to be down? Every other category, AI seems to be down 20%. Coins under AI categories are down 20% in 7 days. Now, you will check them by market cap. Look at this, the market capitalization, which is an estimation of the valuation of all the cryptocurrencies in that category, right? Those under, smart contracts. This is not one coin. There are many coins in that category. Those on the smart contract platform seem to be having over $2.7 billion, right? One, two, three. Yeah. What am I saying? This is like, wait, yes, this is six, like this is like 2.7 trillion, or I think that's what I'm saying, right? This is 2.7 trillion. So there are what 12 zeros. So yeah, 2.7 trillion, and they've been down 7.6%. I would love to also open coin market cap as we are uh, discussing, so we can actually see coin market cap. It's also very interesting because with coin market cap, you can literally make see many things. So let me show you coin market cap. This is coin market cap. It begins to show you the market cap of the entire crypto market, $3.2 trillion. The entire crypto market. The fear and greed index is saying that everything in the crypto market is currently in extreme fear, and this is the time investors want to get it. But of course, you don't want to use this alone to tell yourself, "I want to jump into the market to buy." You need to be very, very careful. But I'm saying this is already an indication that can tell you that this is what the market's all about to do. Now, um, so let's say you just thought of what are the important coins um, that are having low market capitalizations or they are not very much known. You can always use. I want to pick up some tools for us to see. Okay, all right. Look for You can look out for newly listed coin, trending coins. You can also check out for coins that are under artificial intelligence categorizations. Right, want to click this. You can also use filter button. I'm going to be showing us how that works quickly. I'm just showing us how you can do a bit of your research. You can tell yourself, majority of these coins, take Bitcoin for example, it's already having over $2 trillion market cap. It's already too expensive. What about coins that are like $2 million market cap? That could be very, very cheap and that could do a 10x, right? That could multiply or increase their market cap 10 times between a quarter or more. You can actually check this out. Excuse me, on on coin market cap, just right there on coin, market cap. So um, once you tap on AI coin, this is what it brought out. Every of the coins under AI. Some of them are already down terribly. Look at this one, ICP down 43% in 7 days, right? And of course, with others. So let me just come back and show you how you can use your filter. I know that is very much possible um, on on coin market cap. Yes, you can actually use filter. The filter button or the filter icon is I'm not sure if that is also possible on coin market on CoinGecko. I think it is. I'm going to show us that also quickly. But let me just finish the rundown on coin market cap. With filters, you can also check um, the coins you want to check for. The range, let's say you want to tell yourself, just be between a $1 million, 123, 123, $1 million market cap to about $50 million. These are low cap gems. They call them low cap gems. In fact, up to $100 million are still low cap gems. So you tell yourself that's the market cap and what category you can check for different categories. But also you want to check coins under agriculture. as that is having this medium market cap. I also have their numbers. I want to show me the top 100, top 200, and I want to look out for these coins, whatever the exchanges are, so that I can pay attention to the agricultural sector, as that is of great importance to me. Interestingly, only one coin was brought out. So I check this out and I begin to do my research. I can click on this AgriDex coin. This is how you do your research on coin market cap. And of course, the same thing goes for CoinGecko. You can simply begin to check, oh, this coin has been down 97% from December last year. When was it launched? You can actually come to it about, you read a bit of details about the coin, all of those, and you check the founders, and you can read and check for many details. The total supply of the coin, it's about a billion units, and you can see many things. The market, where is this coin traded? It's traded on Gate and all of that. So I'm saying all this to just tell us that doing your research is a very great proof that you are financially prudent. And of course, just the same way we did on coin market cap, you can do on CoinGecko. You can actually check for the market cap valuation. You can put 50, um, 50, the top 50 coins should be shown to you when you customize. You can always customize what it is you are in need of, or the coins you want to filter out within and on CoinGecko, so you can actually pay attention to what is of great importance to you. So I think there might not be so much of customizations as I can see right here, but then you might just tap on the part that really matters to you and get some important feedbacks from that. So either yes, what do you say? Oh, the call is ending now. Interesting. Okay. Okay. Okay, just a moment, first of all, on YouTube, we're trying to, yeah, kind of finish all we're doing because of the discussion. Just a few moments to go, we're done. All right. Um, I hope we really get good at this. Okay. All right. So we are so sorry. We are going to be wrapping up in like 10, 15 minutes time. Time is really gone. I'm just checking that also. And tomorrow is Sabbath. So, um, so you can actually just use all we just mentioned to check out for different narratives on CoinMarketCap and CoinGecko, and you pick out what the coins you want to invest in, and you pick the gems. I'm telling you, we are entering the bear market. This is the best time people can actually make money with just $50. People can make $5,000, $10,000. Just not by rushing in, but by doing research from now till the year end of next year. So between now and next year end, the market will be down. People just try to save up without let to invest in crypto and stocks. So let's just wrap everything up quickly. And I've told us how you can pick out all of those coins in different categories: gaming, reward asset, RWAs, AI, different things. Join communities and of course ask questions. I think that's pretty much it. The future of finance is really now. So let me just show us how we can buy assets um, on Bitget. I'll combine assets and get. So I'm going to open this wallet with this. Okay, let me just join. Okay, um, with this account. Just a minute, please. So I'll just show us how we can buy spot and futures. Okay, all right. So let me. Oh my God. Okay, so let me show us how we can buy. Let's close. I believe you can see the screen. Yes. All right. So this is the Billiard app. This is the home page. From the home page, you have several information on your deck. What simply tells you the coins that are trading actively with more volume, right? Gainers tells you the coins that have gained profits or percentages in 24 hours. Cross has done 63%, and of course the same thing goes for Prio. Creo trade against USDT. So when you see coins like you see things like this Creo USDT or even this Forex, you have a Euro USD. This is called a trading pair. They are paired because one is used for buying the other and one is sold for the other. So you can either use USDT to buy Creo and you can use Creo, you can sell Creo to get USDT. That's just how it works. And when you come to users, those are the ones that have lost the most money. Jelly has lost 20%. Same with FLK. And that's it. If you want to trade futures, you tap futures. It's right here. Just the second icon to the top right corner. To the bottom right corner. Futures. If you want to trade spot, click on trade. Once you click on trade, you can trade spot. What is spot? Spot is the place where you buy the underlying asset. You actually own the asset. For example, here on spot, this is XAUT, which is gold. If you buy anything here, that means you are buying them to hold, to own, to keep. And for me to change to another asset, say I want to buy BNB or maybe ICP, I just search. You can see spot, futures. I will tap on the spot session and then it brings me to spot. Now let's quickly buy some units of ICP. Don't forget before you buy, you must have done your research. So let me transfer some funds to spot. Um, okay, futures. Let's transfer this. So we have 6.5 USDT right here under available. I believe you can see that available. And there is something called market that we are seeing. What does this mean? If you look to the right bar, you'd see two different color fonts. There is a red color font which you're seeing above 5.240 and there is a green somewhat like green. So the ones below, which is like green color, is the is the buy orders. The ones that are red are the sell orders. This section are called the order books. That is where the units of this particular coin that people want to buy or sell are constantly being recorded. And you can see that live. So if I use the limit order, because there are different types of orders, it's just like you have different kind of way you want to get your There are limit orders, there are market orders. So you use limit order because you're expecting the market to get to a predetermined price. You have a preference for the price you want to buy or sell. That's where you use limit orders. But for market order, you want instant execution. So the current price of ICP, as you can see, is 5.25. Look at the right side where we have notable. So the mid price between the red guys and the green guys is the exact actual market price for the particular asset. So that black color font price is the market price, 5.253. So, but if I use limit order and I buy total $5 worth at the buy price of 5.242, right? And I click buy, it will give me a review of what I'm going to be doing. What I'm literally saying is I want to buy ICP at the price of 5.242 with a total of about $5 using limit order. Then I would confirm. Once I click confirm, you'd see my orders are set. Now look carefully, you'd see that something is like a dot by the side of the green guys going up and down. That's where my order is. You see it's at the 5.242. Do you hear that sound? That means my order has been bought. When I click assets, I will see my ICP. Are you seeing that? Now that tells me the return on my investment, the ROI on my ICP. I'm already netting a negative 0.14% on the ICP we just bought, right? And the unit of ICP we got was 0.9528. Do you get that? So we use the limit order to buy ICP. But when we used the limit order, we had to wait for a couple of seconds, but then it happened just right before our eyes, isn't it? So, so sometimes you have to wait for hours or days, especially if your set price for buying or selling is slightly lower or way higher. Okay. But for market order, which is the second type of order, when you click buy or sell, it does that instantly. You don't need to wait, but it uses the exact market price of the market at the given time. Please, do you understand that? Hello? Okay, great. So we're going to be selling these assets with markets this time around. So we'll go to sell, and then you'll see available 0.9528 ICP. We will not use limits, so we'll use market. And this time around, we'll just move the bar. You see this bar? We'll move it to the extreme, meaning we want to sell everything. The return we have is negative 0.06, negligible, but then we need to show us how to futures trade, how to trade futures. So we'll click sell. It gives us a review as usual. You want to sell ICP USDT. Your order type is market, so it does not show the price, which means it could be any certain price. And of course, market implies that within the time you saw the price last time, which is at 5.235, and when the market gets executed, it might have quickly changed. But that wouldn't happen to a limit order. I want us to take note of that. So we're going to be confirming, and then it's sold. Now we have our money back again, right? So if you click on this particular icon, it's like a book with a clock. This icon right here, it will tell you the order history. So you haven't open orders and order history. Click on order history, then you see what you did. So you literally bought 0.9538 ICPs order quantity at an order price of 5.242. And then you later, and this was the time you did that transaction. Where do I get? See this? 225, 11, 15, 22. That's 10 o'clock, 12 minutes past 12, 30 seconds Nigerian time. And of course, we literally also sold that same unit, but this time around, We sold it at 5.234, right? And then um, that was it. It's completed, and this was the time 10:15, right? So that's all there is. So let's come to futures. So whenever someone give you a trade and say spot, come to trade, tap on spot, and then if you're told market, you come buy. If you're told limit, choose limit. It's simple. Now for you to come to futures, futures is a bit different. Let's get this same phone back here and use. So futures is a bit different from um, spot. And this is why futures is a bit different. Futures allows leverage. And there are two types of leverage. There is the isolated margin. Now look up. You see there is this particular coin, the Asta. If you tap on it, you can choose different futures. They are all contracts that allows you to trade the exact underlying asset. You have their names there. So if you tap on ETH USDT, you're going to be trading the ETH USDT contract, right? If you do anything like buy or sell here, you don't own the coin, but then you can profit off the coin. Now, this is how you can profit way more off the coin than your counterpart who is trading um, spot because you could leverage. I don't know if you've seen this 100x and 50x. Don't use 100x and 50x, please. But then 100x is a leverage. That means my $6.5 can be multiplied 100 times in the market. What that simply means is I'm going to be borrowing the money from BitGet to trade. So once I open a long, like you can see, this is a market order. Don't forget, you can always change the limits. Those are the two major orders. All of those are also important, but the major ones are limit and market orders. You know what limits are. You want to wait for the market to come to a particular price. So if I were going to take a long position or a buy position, those are the way it's called, long or buy. All right. The 100x will multiply my long, and the 50x will multiply my short, meaning my $6.5 would literally for the long look like $650, and my $6.5 for the short will literally look like some maybe 300 and something dollars, right? Right. So what that means is I'm going to be borrowing money. So if I take a trade, which I would do right away, you would see that I'm going to reduce the leverage anyways. You would see that there's a place I'm going to be paying an interest because we borrowed the money. We don't have the fund, but we literally borrowed the money. There are two types of margins. I must mention that. So if you see isolated and you tap on that, you would also see cross. What makes this different? Isolated margin is a margin mode where you allocate money to just a specific position without allowing the exchange to cross over to where you have other funds to take money. So when you are trading the market, maybe on a buy or a sell, and for some reasons, the market begins to go against you, and your capital was now negative 80%, negative 90%. What isolated does is if you have funds in spot, it will not touch them. It will leave them there secured and allow that portfolio or that trade that is going underwater to just get lost, right? Or maybe it hits stop loss or something like that. But if it were cross margin, um, what cross will do is it will get over to spot, take some money from there to keep the position ongoing. And if we got so lucky and the trade goes your direction, that would have been a good day. But it was a bad day where it had crossed over to spot to take money and the trade eventually goes against you. You would not only lose the money you had initially trading that market, you also would have lost the money you had in spot. That's why I mostly advise people to just do isolated margin. There's no point doing cross margin. Anyways, let's try taking some trade on Ethereum. Reduce the leverage as usual to the PRS minimum. The best trade leverage advisable is the 5x leverage. So we're going to take a long, right? And we use, we haven't done analysis. The best thing is to do analysis. When you do analysis and you get your analysis, you then come right here. You use limits, you assert the price. Say you believe Ethereum is coming to 3,100. You would also tap on your take profits because those are part of your risk management skill. And you feel like Ethereum will just go slightly upwards to around $3,500. The analysis, you were solid about that. And then you feel you can't afford to lose just more than $0.5. Now, the entry price is 3,100. The stop loss on SL. Now, if you look at buy profit, you'd see it tells you the amount you can afford to lose. 0.5 minus $0.5, which is 8% of your capital. And then if it gets to take profit, you get $4 profit, which is 64.5% profit. So you tap on that, you click OK, you get a review, you're opening a long with a 5 times leverage, which means you're going to be going 5 times. And you get the value of your order, which is $31. Don't forget the money here is just about $6, and so 5x gives you about $31. And the margin mode is isolated. The exact money you're going to be using is $6.2. Your take profit is 3,500. Your stop loss is 3,050. So when you review that, you click confirm. As you do this, it goes, and then you would have it on their orders. So let's check. Now, you're seeing that, right? These are the orders. It's currently waiting, but then you just have that waiting, right? Now that's how you set a limit order, either for a buy or a sell. For buy, you click this one, the green. For sell, you click this one, the red. So ensure you reduce your leverages for both the buy and the sell to 5x. That's how you do about it. So once you get a signal, that's how you just want to impute. Ensure you check your margin mode, check your leverage, impute your price using limit, set your take profit, and move the bar to choose the quantity or the size of money you want to use for that trade. So let's cancel this order. That's how you go about taking, you know, futures trade. Let's take the market order. Let's take a market order using a short position. We're going to be setting our stop loss at just some random figure. Um, let's say 3,188, and we're going to be setting our take profit at, let's say, 3,180. So we're going to open a short, short, market. Now, I think we have some bit of network issue. We're literally done right now. So now, you see it's gone. The trade is already open. 5x leverage, right? The margin is $6.3, and then the leverage is 5x. The return on equity is 0.15. Then you see this MMR. That's the interest you are going to be paying for taking that trade, because you have borrowed 5 times from the get. It's going to be negligible after all. But then, because it's not a big capital, right? But then this is how you get about futures trading. So that implies when this particular asset drops, if it drops 0.5% downwards or 0.5% upwards, I am multiplying that percentage for my benefit. So this is what future trading is about. So if you check, there is a preset take profit and a preset stop loss. All of those have been factored in. So I think we said 3,170 for the take profits, and then we said 3,188 for the stop loss. So you can literally see the potential loss $0.07, potential profit $0.1. So I think this is all there is I want to talk about, and that's how we get about futures trading. It's not difficult, and trust me, you'd actually get this video on YouTube after you need to go review it again. So I think that's very much. And to close your trade, you can click close. You can close half, 50%, or you can close everything. right? Just like that, you can also reverse your trade. If you think the market is going upward and you suddenly think, oh, I was wrong to short the market, I want a long, click reverse, and then it will definitely reverse if I click that. So you can see it has reversed from a short that's turned to a long. You can see long 5x and all of that. So I think that's all there is about trading. Yeah, the more you practice and you learn and you study, you'll get to know so much about it. So I think with that, I'm closing this. We are done with the most of our discussion in um, yeah, we're done with the most of our discussion in the Q3 of um, with the Q3 of of BCB and the final one for the year. So I think that's pretty much it. So we are heading to the future of finance, and that's tokenization. And we've pretty much discussed, risk management, support of futures trading, the basics of research, and how you could Bitcoin, and that you should, look up for the future of finance. We had a big opportunities ahead, joining communities and asking questions, practicing small trades, and also learning day by day. So I want to say thank you all for coming and being a part of this, beautiful journey. Thanks, Mr. Lawale, and then to our community manager. Thanks a lot. Blessings. All right. So I don't know if there are questions before we call it a close.